Wednesday, November 1st, 2017, Monaco 64, home of alternative economics and contrarian views. So it's around 11:30 a.m. London, which actually is 7:30 a.m. New York. We're only 4 hours ahead at the moment for this week. Our clocks have gone back. So I want to talk about what the markets are doing this morning. So there's some interesting things going on. And I want to talk about the word credit and what it really means, the etymology of the word. So as I speak here, spot gold, 1277.20, up 6. We've been up as high as 1281 and as low as 1268. So quite a wide range this morning or overnight. Spot silver 16.95, up 24 cents or 1.5%. It's been as high as 17.04. So precious metals are doing well, and you'd expect the dollar to be dropping against the Japanese yen. I've talked about this relationship many times, but surprisingly, the dollar is back up above 114 against the yen. Yesterday, we even traded below 113. So we're up 1/3%, dollar versus the yen, and the precious metals are still doing well. Am I saying that this is it? Precious metals are going to go higher now, and we're going to see it at $2,000 an ounce? No, I'm just saying that we need to pay attention to that. That is something unusual for gold to be doing well in spite of a strong dollar yen, and in spite of a stock market that continues to go higher. The Dow is up 135 points, up 0.58%. S&P is up 10.5, 0.4%. The NASDAQ 100 futures up 30 or 0.5%. The other currencies are pretty steady, not doing much. The sterling nor the euro. So reading the headlines and seeing what people are saying, Zero Hedge is saying that world stocks soar to new record highs as oil, metals surge ahead of the Fed. There's expectation that the Fed meeting that ends today, their announcement will be dovish, a dovish surprise. They're not expected to do anything in terms of rates. Today's meeting as well is not the usual meeting where they have a press conference. It will just be the announcement, and they won't release projection materials, so we just have to wait for statements. They're also talking about the new Fed chairman who President Trump is supposed to announce tomorrow. They're saying that it's either going to be Jerome Powell, who's already a Fed governor, or John Taylor, a PhD economist from Stanford University. Some people seem to think that this is why the stock market keeps going up. The Fed is going to be business as usual, and the tax reforms are going to help everything, but difficult to say what's really affecting the markets. The stock market has been going up even before these events, so it's just carrying on the momentum. What else? Yeah, I wanted to talk about credit, because if you look at the etymology or the origin of the word credit, it comes from the verb credere in Latin or Italian, which means to believe. So you have to believe that your counterparty is good for, the loan. And that's what our system right now is all based on. There's so much leverage, not only, in the underlying markets, but also in the derivatives market, in the over-the-counter derivatives, in the exchange-traded derivatives, which are futures and options. And I'm sure there are many new derivatives we've never heard of that the international bankers, the investment banks are trading amongst themselves. CDOs, Square, all that. I'm sure they've invented even more. And the reason why these are leveraged is because derivatives, as I spoke yesterday about the Bitcoin futures contract, they're always, you can always buy it on margin. You only need to put 5 or 10% down of the notional amount that you control. So that's what, and not only, financially and our markets, capital markets are leveraged to the hilt, but also businesses, individuals, governments. So, and I read something interesting from Bill Bonner yesterday about how there's so little physical dollars or cash in the US. He thinks there's only about 400 billion in cash, and that the economy functions totally on credit. And if there's to be a credit problem in one section of the economy, it could spread very quickly, and it could be disastrous. So we don't know what's going to trigger that. I think it's just a mood and belief in the system. It doesn't matter, if the Fed hikes rates or cut rates. It all depends on credit and the belief and the faith that the system, participants' faith in the system. So it could change very quickly, very fickle. And the other thing I wanted to talk about is looking at the Fed funds rate, and I know we're very low right now, around 1.5% or so. I think 1.25 to 1.5, and historically it's really low. But looking at this chart here of Fed funds going back to 1980s, and the cycles of Fed rate hikes, the high of the cycles are getting lower and lower. And so to think that the Fed hiking another 25 basis points in December will not be a problem because they still got a lot of room on the upside might be a mistake. Because if the system, financial system, monetary system was in good health, we'd be back, to at least 5% Fed funds right now. So the fact that they've kept it low for so long and they're raising it so gradually since the end of 2015 could mean that we're very near a disastrous move by the Fed. Because if you look at all the disasters we've had financially with the Fed, what preceded that disaster was the Fed, rate hike cycles. Back in 07 and 08, they'd be raising rates from, I think, end of 05, I'm not sure, down from around 1.5%, all the way to like above 5% by 2007. And then we know what happened after that. Same thing, from 99 to 2000, they raised the Fed funds rate. Same thing in 1993, 94, when we had a really horrible bond market crash. I remember that. I was in the markets. It was a really bad bear market for bonds. The Fed had started raising rates. So just because we're here on one handle in the Fed funds, it doesn't mean that the Fed is doing a great job and that they're going to be in the clear. And the thing to keep in mind is the Fed is not God. If it were God, we wouldn't have the financial disasters we've had in the last 30, 40 years or in the last 100 years, and that the markets still rule. I know there's a lot of manipulation, but once faith is lost, not even the Fed nor the other central banks or the big banks can do anything. Look what happened in 07 and 08. So that's what it's all about, faith and belief in the system. What will make people lose that? I don't know, but it could happen very quickly and overnight. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. Excuse me, and you can follow me on Twitter and on steemit.com as well. And I'll talk to you later. Bye.